HELOCs versus home equity loans in 2025. Welcome back to the channel. This is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. We are live. We are blessed. Thank God for another day. Happy Monday to everybody. Make sure you like, comment, share, subscribe to the channel. This is going to be a good one, okay? So the Fed just cut rates again, and the prime rate dropped to 7.25%. So what does this mean? This means HELOC rates across the country are resetting for lower right now. Tonight, I'm going to break it all down, what that means for you, how HELOCs and home equity stack up against each other in 2025, some of the banks and credit unions that are offering some good deals right now on home equity line of credit, and some strategies. And I'll probably take some questions. All right. So let's get into this. We all know this month, about 2 weeks ago now, September 18th, the Feds dropped interest rates, the Fed funds rate. And most people think that when the Feds drop the rates, mortgage rates, long-term rates, 30-year mortgages, 20-year mortgages, you guys automatically assume that, oh, mortgage rates are lower. And that's not the case. What you guys are overlooking is short-term rates, because this is what is directly impacted by the Fed funds rate, right? Auto loans, credit cards, home equity line of credits, home equity loans. These loans are directly impacted when we see a drop. So prior to the federal fund announcement rate cut, the prime rate was 7.5%, right? Immediately after, lenders shifted the prime rate to 7.25%. You see, it dropped 0.25%. The Feds lowered their rates by 0.25%, okay? Because HELOC rates, prime, and plus a margin, we're going to break all of that down too, so you guys understand how HELOC rates really work, right? That drop immediately lowering the interest costs to your home equity line of credit right now, right? So this is what you have to pay attention to, guys. And everybody who has equity in a home and you considering doing a line of credit, you guys really need to be paying attention to the Fed's next two announcements, because this can make home equity rates even cheaper coming up by the end of this year. Okay? If you got equity in your home, 50K, 100K, type in the chat, 200K, 300K, type how much equity you have in your home right now. Type it in chat. Okay? So let's break this down a little bit. Home equity loans versus a HELOC. Okay? So a HELOC, for those of you who don't know, HELOC stands for Home Equity Line of Credit. Home Equity Line of Credit. Type HELOC in the chat. A HELOC is a variable rate. It's tied to the prime rate and the margin. It's a revolving line, meaning you can borrow, repay it, and borrow again. Borrow, repay, and borrow again. It's typically interest only during this period, which is called the draw period. Then principal and interest in the repayment phase. Typically, your draw period is 10 years. Typically, your interest period is 10 years. And within that 10 years is when you can do your borrowing, you can pay it off, and then you can reuse it again without requalifying for a new loan. This is kind of like a credit card, so to speak, right? So you get to borrow, use it, pay it, and reuse it. Make sense? And yes, for those of you who are watching this on Instagram, I am watching this. I am streaming this live on YouTube right now as well. So the HELOC gives you a lot of flexibility, right? You're only paying on the monies that you use. So let's just say, for example, you take out 100K HELOC. You use 25,000 of that HELOC to invest into a investment property or business. The bank is only going to charge you interest on that 25,000, not the full 100,000. When you get your, and you're only going to be paying back interest only on that 25,000. So when you get your statement, the minimum payment will be just the interest that's required on the loan. If you want to pay down that 25,000, you will have to make principal payments to pay it down. But once you pay down that HELOC, let's just say that 25,000, now you have full availability of 100,000 again, and you can rinse and repeat. Same thing works if you maxed out the HELOC. If you took out the 100K, your payment would be based off of the full 100K, interest only, minimum payment. And when you start making payments, it will only be interest only unless you make extra, excuse me, to pay it down. Okay? So that's kind of how a HELOC works during your draw period. Then after the draw period, it converts into a principal and interest repayment 20-year term, which is adjustable. So the goal is to have your HELOC completely to zero before the draw period expires, because you don't want to be held with paying the principal and interest adjustable rate over that time when it's in that principal and interest repayment phase. Y'all following me right now? Y'all tracking? Are y'all following me here on YouTube? Follow me here on Instagram. Are y'all tracking? Okay. Type yes in chat if you follow me so far. And shout out to all of y'all who got some equity in your house. Right? So, y'all tracking. Okay, great. Now, a home equity loan is a fixed rate lump sum upfront payment. So in that same example, if you are taking out 100K on a home equity loan, then you are taking out that full 100K at closing. You're going to get a check or a wire for that 100K. And when your payment is due, you have the fixed monthly payments from day one. It's predictable, but you don't have no rate drop benefit because it's going to be a fixed rate for a set term, 10 years, 15 years, 20 years, whatever that company works out with you. On a HELOC, it's an adjustable depending on prime and the prime rate, right? And your margin that you close with, and I'm going to break down the margin and everything like that too. But typically your interest only draw period is 10 years. Okay, so you have 10 years that can go up, down, left, or right, the interest rate. Now, with the home equity loan, now let me mention this. Both of these are typically in second position. See, if you have a first mortgage, that first mortgage is in first position, first lien, meaning if you foreclose, if you sell the home, they're the first to be paid off. Second lien is the HELOC or the HELOC. So if you're taking out either one of these, the lender, the mortgage that you currently have in that lender, they have to agree to do a subordination agreement. Type in chat, subordination agreement. Subordination agreement. Type in chat. Type in chat, subordination agreement. This basically says that they are, the first mortgage is allowing these folks to come behind them in second position. Okay? It's very important. It's a little bit of a process that has to be done, but not nothing crazy. Now, if you want to do a refinance, you have to do that subordination agreement too. So I just want you guys to be aware of what these things are. So if you go down this process, this is not something that's foreign to you, this language, these terms, okay? So my takeaways about the HELOC and the HELOC. If you have equity in your house, it's a great tool. And with the Fed funds rates trending down, especially we got 2 more rates cuts coming, HELOCs are extremely attractive right now because of the flexibility. But you got to know your margin, you got to know your floors, and you got to know the caps on it to make the right decision. Read the paperwork, ask questions, right? So let me explain to you the prime and the margin, right? So if the prime rate today is 7.25%, your margin is fixed by the lender. Some lenders might give you an offer where they tell you, okay, the margin is 0.5 point or 1 point or 3 points or whatever it is. That's what the bank is making. That's basically how we get paid, right? So if your margin is, let's just say 0.50 or 0.5 point, and then the prime is 7.25, then that HELOC rate is going to be 7.75%. The floors and the cap, it limits how low or how high the interest rate can go. Okay? So they might say you have a floor rate of 7.25, but your cap is 10%. So that means your rate can't drop. If you lock into this agreement at 7.75%, your interest rate can't drop lower than 7.25, depending on how low rates go, right? But it can't max out at 10% if rates trend up. So you have a floor and you have a cap. You're tracking? So this is extremely important when you are asking questions and speaking to a banker about potentially taking a HELOC. Most of you make the mistake and just are concerned about how much money you're going to get, what's the rate, but you never ask about floors and caps. And this is why I'm having this conversation right now, so you guys are super educated when you're talking to bankers. I want you guys to know the game. Copy? So that's the prime, margin, the floor, and the cap explained. Let's talk about some lender guidelines to qualify for. And throw your questions in the chat, because at some point in this video, I'm going to be taking questions. So I want you guys to throw your questions in the chat as we are going along. So lender guidelines to qualify. And we're going to speak to primary residence, single families, duplexes only. 3 and 4 families, this can be done for owner-occupied properties, but the guidelines might change depending on the lender. But I want to speak to single families, townhomes, condos, duplexes right now. Typically, to get the best rates, you need to be above 740 credit score. But some lenders might go down to a 640 on a HELOC. 660 plus is ideal. 700 plus is great. 740, your 740 higher is the Mecca. Now, what does this do? The lower your credit score, the higher the margin. 620, 640, 660, you might be in a 3-4% margin. That's when you might be seeing a quote 10, 11, 12%. 740, you can go to A paper banks, and I'm going to list some banks and some credit unions. I make no money off of that. I'm just giving y'all some information. Do your due diligence on your own. Everybody got their own programs. I'm just trying to give you a general outlay of everything here. Some lenders will go to a CLTV. Type in chat CLTV. CLTV stands for combined loan to value. Your home value minus the mortgage that you owe. So if you are trying to do a home equity line of credit, again, it's important for you to know what is the max CLTV that the lender will go up to. So when you guys are inquiring with lenders, no matter how many units you have, 1 to 4 family, condo, co-op, one of the first questions you want to ask them is, what's your minimum credit score? What is the max CLTV for my blank property, my single family home, my duplex, my triplex, my quad? And they'll tell you 80, 85, 90, 70, whatever it is, and you can do the math. Copy? Debt to income ratio, DTI. Type in chat, DTI. Type in chat, DTI. Your DTI needs to be around 43% or lower. Ideally, if you're 35% or lower, you might get a better deal. But DTI needs to be 43% or lower. Now, there are some lenders that will go probably up to 50% DTI. But choose wisely. Because remember, if you're doing a 50% debt to income ratio deal, always keep in mind, when we are calculating your income, it is based off the gross income that you make, not the net. Your net income is after taxes, your take-home pay. So although we're qualifying you at a 50% debt to income ratio, you're probably more like 75, 80%. So I just want you guys to be fully aware of what that really looks like. Copy? Income documentations, pay stubs, W-2s, tax returns. Some banks and credit unions might be more flexible than other of what documentation, but have your lender file together, and typically you want to have 30 days of pay stubs, last 2 years of W-2s, last 2 months of bank statements, copy of your ID, copy of your mortgage statement, copy of your homeowner's insurance declaration page. Okay. DTI is based off of your Coach D. She says, so the DTI is on the gross and not the net. Correct. The DTI is off the gross, not your net income. Now, primary residences are much easier to find lenders and banks, credit unions who will do home equity line of credits or HELOCs. Even if you have a second home or vacation home, it's a little bit easier. Investments, few far in between, will do investment property HELOCs. And if they do, you're going to be well over 10% in today's market. Okay. Fees. There are closing costs with a HELOC, but depending on the bank, and I'm going to go through some banks that I will recommend that you guys look at. Fees You want to ask about the application fees, if they require an appraisal, if they're doing a full appraisal, is it a drive-by appraisal, are they doing an AVM? Type in chat AVM, automated value module, right? Like this is something now that they are not going to your house, right? AVM appraisal is they're not going to your house, right? Automated valuation model appraisal. They are not going to your house. Think of, when you think of AVM, y'all, think about Zillow. You see how Zillow gives you a zestimate? You see how Zillow gives you an estimate or a zestimate? It's kind of the same thing when a lender is doing AVM. They're using that number. And if you have a lot of equity in your home, then they'll go off of that AVM. So, but you still want to ask about those fees. You also want to inquire about prepayment penalties. You want to inquire about there. Sometimes when lenders are offering you a lower rate than market, sometimes it's just a teaser rate they're giving you, right? They might say, hey, we'll give you this rate for 6 months, or your first 6 payments, your rate will be below prime, or whatever the case may be. It's a teaser rate. So you always want to find out, what are the full terms of the offer, right? Closing costs, do you have to pay it up front? Is it rolled into the loan? Some lenders will give you no closing costs if you take out a certain amount of money at closing. You know, there's all various different types of things that different banks will offer. Just find out what it is. Ask questions. Closed mouth don't get fed, ladies and gentlemen. Closed mouth does not get fed. Ask questions. Grim BK says, can I get a HELOC with a different bank from my mortgage lender? Yes, and that's a very good question, Grim. You do not have to go with the bank that you are currently paying your first mortgage with. I will highly recommend you look into, and I'm gonna give you guys a couple banks, but the answer to your question is no. Right? Verona Davis, you asked me, this was a good question. I'll put this on the screen. You said, hi, man, I have a rental mixed use. How do I get some funds out of this property? You need to do a cash out refinance. Email garlandgroup@unmb.com. garlandgroup@unmb.com. Why is it so hard to find a HELOC in Texas? Because Texas has its own rules and regulations about this. So you're probably going to be easier just to do a cash out refinance. I'm listening. It says, do you agree with the first lien HELOC on a primary residence? Yeah, I do like and that's what a lot of the velocity banking hacks and things like that people talk about, where you have your HELOC as your first lien. I do agree with that. It can be, again, if you pay down on your principal, because it's basically an interest only loan, right? So if you do a HELOC as your primary residence and you're making, large principal payments, you can pay it off essentially faster than a 30-year mortgage and pay less interest. So yes, you could get a HELOC as a primary. You might have to put more money down up front, but it is possible. Good question. And we'll probably get into some velocity banking and all that other good stuff later on as we progress on the channel. Okay. So closing costs and timelines, I kind of went through like the closing costs and everything but let me break down the application fees. Is probably like $100, $150. Appraisals can be like $500. Title recording and fees can be about $500, just depending on where you are, right? Like I said, some lenders waive closing fees and stuff like that with HELOCs. The time frame to close a HELOC can be 2 to 3 weeks, sometimes faster, just depending on the lender. So from a closing cost perspective, it's not as expensive as doing a traditional cash out refinance. It is going to be a lot cheaper to do a home equity line of credit. Copy? Y'all tracking? Okay. So let's get into some banks. Let's talk about some banks. Type banks in chat if you're ready to hear some banks that are doing home equity line of credit. Some of the banks that I've seen people get loans. I'm not going to give you a whole bunch, but I'll give you guys a couple banks that you can use to do a home equity. Okay. So drum roll, please. I like that. Let's do that again. Drum roll, please. Nigga got sound effects now. Let's go. Okay. Let's grow. Let's talk about some banks. Okay. I'm gonna give y'all already know, like, you got Navy Federal Credit Union. Okay, Navy Federal Credit Union. You got a credit union called UW Credit Union, right? UW Credit Union. I love it. Bank of America, Citizens Bank, PNC is also a good bank. With lines of credit, I know several people who've used them. Your local credit union is always great. Local, first stop, I will go local regional bank or credit union. They oftentimes beat national offers, especially the local credit union. They want local business, right? It's definitely the sound effects for me too. I'm gonna add some more sound effects. All right, we're gonna get this streaming thing down pat. But local credit unions and banks first. Second place I would look is like digital type lenders, right? You got like the Sophie's Upgrade, you know what I'm saying? You got some of those type of lenders out there that are entering the HELOC space. Digital lenders. And then, like I said, the Bank of Americas, the Navy Federals, UW Credit Union, you got PNC, you got Wells Fargo, you got Chase that offers it. US Bank right now. US Bank, excuse me. US Bank, let me pull this shit up. US Bank is offering a good program right now. Right? US Bank home equity line of credits, right? If y'all all type in chat, Google US Bank. And again, I don't make no money from these people. Right? I don't make no money. No money at all. But right now they got rates ranging from 7.7 APR to 11.35% APR. This assumes a credit line of 50K or more. They want an LTV of 60%, a FICO score of 730 or higher, right? So if you got the equity, excuse me, and you have the FICO, they're a good option. The reason why I'm saying that, they have a fixed rate option, right? You have the option to lock in a fixed interest rate for up to 20 years or some or all of the money you borrow during your draw period. It's a simple way to add predictability to your monthly budget. I think that's key. I'm going to repeat that. They have a fixed rate option that for up to 20 years on some of all of the money you borrow during your draw period. Damn. So those are a couple banks that I will look into. And I think that US bank option, and I've seen a lot of people that come, a lot of some mentees have been using them to go ahead and get their HELOCs to buy investment properties. It's been you know what I'm saying, like it's been a good program, and I've seen people closing really quick with it. So again, I'm not here to I'm not here to gatekeep the information from you guys. I'm not here to gatekeep anything. I'm here to give you the options. If you're in New York, you can go to Jovia. JOV. I'm not sure if they do out of New York, but if you are in New York, Jovia, JOVIA. They have some really good terms right now. JOVIA. If you're in New York or tri-state area, again, I'm not sure if they go outside of New York or the tri-state area, but they give you up to $1.5 million. And they right now have a low introductory rate as low as 5.99 APR for the first 12 months. That's insane. So Jovia. And look, they I'm trying to tell you, they got no closing cost options from lines from 25,000 to half a million, 80 LTV, right? Like, you know what? I'm gonna just show you guys this. Let me just show my screen. Let me show y'all my screen. Let me show this. Because this is a good, and again, I make no money from this. Zero. Right? I make zero money from this. But again, I don't want to quote unquote gatekeep the information from you guys. I want you guys to be able to see this. And if you're on my Instagram, you're probably not going to be able to see the screen clearly. Then that means you just need to go over to my YouTube channel. Let me try to make this a little bigger for you guys. Pause. Right. So you can get a better view of this, especially if you're on YouTube. If you're on YouTube, type yes in chat. But they got some good options right now. I'm not gonna hold you up to 1.5 million. As soon as Garland Gardens is done, I'm going right for this. This is where I'm going. This one, and I'm telling you guys this because this is where I'm gonna go get a HELOC on my crib. Right. So if you need to borrow to 500,000 to 1.5 million, you got a 70 LTV right here, 5.99 for the first 12 months. They'll do primary, second home, like 10-year draws, 20-year repayment, fixed variable. Members pay all closing costs. If you're doing a large line from 500 to 1.5 million, but it looks like if you're doing anything less, they're going to pay all the closing costs. So if you're doing under half a million, they're going to pay all the closing costs. But look at the rates, right? 5.99%. They got a fixed loan for 8.5% and a high LTV line of credit for 8.75%. So, and this could go a little bit lower, right? As the feds continue to lower rates. I'm trying to see in here. I'm trying to see if they lend outside of New York, but you guys can go to their websites and go through the motions and figure that out on your own. Again, I'm just here to give you some of the information, and this is, let's see some terms and conditions. This is who I'm going to use. Okay. This is where I'm going to go. Okay. Me personally. So I'm showing you this. You guys do what you got to do with that information. But this is where MG going to go. All right. So do we have a better understanding of HELOC versus home equity loans in 2025? Do you understand which banks and lenders you should go to? Do you understand some of the terms, the process, how Fed fund rates really impact this? Let me know your thoughts in chat. Let me know your thoughts in chat, please. Okay. And then also, while you guys are chatting your life away, I want to give you guys a special offer, right? You guys know I have my inner circle mentorship group. And I was on here last week talking about I'm gonna give you guys a low offer here on YouTube. So this is what I want to do for my people over here. Um, you guys have been rocking. You want to be a part of the inner circle. You want to come to the monthly virtual group calls. You want to come to the New York in-person master classes that we have in New York. The New York master classes start back up in January, FYI, because I'm having a baby in literally any day now. So fourth quarter, I'm home. First quarter, we back outside. All right. But you want to have access to over 200 hours of information. I'm going to give you guys an offer. If you scan this QR code right here on the screen, right where my finger's pointing, right, you have the offer of joining the inner circle right now. And you can join the inner circle right now. You can join the inner circle right now. The price is typically, well, no, hold on. I just pointed over here. On my screen, it looked like I'm pointing the right way. But y'all see the goddamn QR code. It's right here on one of these places on the screen, right? Scan the QR code. Take advantage of the offer. My inner circle mentorship is $5K a year. But that comes with, you get access to everything I just said. The community, the virtual group calls, the monthly group calls, the in-person events. But if I'm gonna give you guys an offer for $497, good for 24 hours, good for 24 hours, $497. You won't get one-on-one access to me. You don't get the one-on-one consultation calls and deal analysis one-on-one, but you get everything else that comes with the inner circle. And trust me, you want to be in the rooms with us. Every single month we have a master class. It's usually around 7-8 hours. It's phenomenal. So scan the QR code that's on my screen right now. If you want to take advantage of the offer for $497, you can use Afterpay as well, or you can break the payment up into 3 payments, right? Pick your poison. This will be the best $497, or if you do a payment plan, $600 you'll ever spend on any real estate program. I have probably the best program that's out there, and it's extremely affordable. I promise you, the information that you learn for free ain't shit. We had a call this Saturday, 3-hour long call. When I tell you that call right there, if you guys were on it, you would have made some money. But again, when you join us in a circle at this offer, you don't get one-on-one calls. If you want one-on-one calls, that's a whole nother price point. But I want to be able to invite a few of you over to the inner circle, and you still get a lot of value, a lot of information. You just don't have access to me one-on-one. All right. So scan the QR code. If you're on YouTube, Instagram right now, scan the QR code and you can join today. All right. So let's get to some questions. So Peter, I have 150,000 in home equity. I would like to buy a multifamily unit. Is a rent to own option? If the buyer agrees, I will rent out my current home. What is the first step that I need to do? I have 150K equity and I would like to buy a multifamily. You want to do a rent to own option with the buyer? I guess if you want to put it, do a rent to own, I would say do a line of credit. If you got 150K, you can probably pull out half of that money, depending on credit and everything like that, and then go take that money, use it to house hack, and then have a tenant come rent your property, make sure it's cash flowing, You covering all your expenses and making some money. But that would be the first step, is finding out exactly how much you can get from a home equity line of credit. But then also, when you're doing your numbers and your analysis, you need to make sure you're incorporating that HELOC payment into your analysis as well. Okay? Join it in the circle today. Scan the QR code. All right. DeAndre Thomas says, I would like to buy in 6 months to a year. Pre-approval is step 1. What banks or lenders should I go to? If you're looking to get pre-approved, just email me and my team, garlandgroup@unmb.com. garlandgroup@unmb.com. I'm going to put that in the chat at unmb.com. So it's in chat. I'm gonna put it in the YouTube, in the Instagram chat too. garlandgroup@unmb.com. If you want to get pre-approved, just email us. All right, I'll put it on the screen right there too. Email us. The email is right there. Okay. Let me try to get to some of y'all questions. There was a lot of questions. All right. So Grim BK said, what's first and second lien? So the first lien typically is your main mortgage, right? When you take out, if you do the FHA, conventional loan, VA, that's typically a first lien mortgage. And your second lien will be if you go through MCU, and they got good HELOCs. Those are good rates, right? Then they'll be in second lien position. But these HELOCs that you put in here, Grim, are definitely good rates. Yeah, I'm okay. I just had a little cold recently, but I'm okay. MCU is definitely a good option. Let me see. We had some. Can I? Yeah, I answered that one. Let me go over to. I know there were some good ones on. So many damn comments. It's hard to fucking find them. Okay, Simply OA says, I have a lot of equity in my home, but due to life-changing situation, my credit score dropped. Is it possible to get a HELOC or a refinance with a lower credit score? If you are above 620, yes, it is possible. But if you have late mortgage payments, might be difficult. So if you have late mortgage payments, 9 times out of 10, unfortunately, you will not be able to get a home equity line of credit if you have late mortgage payments. Somebody said in the comments, a Moral Mind Studio said, why they make it so difficult to get a HELOC? It's not difficult. You got to qualify. You see, that's what I was talking about on an earlier video that I did. I think it was like 2 weeks ago. I was talking about refinances and cash out refinances, right? It's not difficult. You need a loan. If you need a loan, what's your ability to repay? So it's not difficult. This is why I always tell you guys, equity is monopoly money. I've said this 100 million times. Equity is monopoly money. Equity is unrealized gains. That's all it is. If you can't qualify for it to take it out, it don't mean shit. You can have $500,000 in equity in your house, but you can have shitty credit, late mortgage payments. You ain't getting no loan. So that equity means nothing. So what's your ability to repay? That's not making it difficult. We want to know, the banks want to know, can you pay us back? So it's not difficult. It's not difficult at all. Is it possible? Natural Mocha Realtor on Instagram said, is it possible to get a HELOC without closing costs? Yes, it is possible. It is possible to get a HELOC without closing costs. Yes. Who wants to play Monopoly in real life? Exactly. That's what it's all about. Playing Monopoly in real life. All right. So that's all I got for you guys. We've been on here for 45 minutes. I hope you guys got some good information from today's episode. HELOCs versus home equity loans in 2025. Scan the QR code, whatever side you see it on here, top right or left of your screen. Scan the QR code and make sure you take advantage of the inner circle offer. If you are a new loan officer like Megan Diaz has just asked me on Instagram, any advice for a new mortgage loan originator, join my inner circle. You're going to learn everything you need to know about mortgages. You're going to be around a lot of like-minded folks, right? You don't get the one-on-one consultations that's going to cost you $5K. But you can join the inner circle right now with this special offer I have on this QR code that's on the screen right now. If you're on Instagram, you see it on your screen. YouTube, you see it on the screen. Scan it, join it, $4.97. Invest into your education. Extremely important if you're trying to go to the next level of your career. And if you are new MLO, this is an amazing time to get into the business. You're going to make some money in the next 12 months. You just got to invest into your education, coaching, and really go hard. Learn. The more you learn, the more you earn. It's very simple. The more you learn, the more you earn. Good question here, L. Williams. Can you get a business loan HELOC on investment property that's free and clear? Possibly, just depending on how much of a loan, the property type, location. It would be probably cheaper and easier to do a cash out refinance on that because it's going to be, where the rates are positioned now, you'll get a much better interest rate. Elvis said Harbor One Bank is offering 6.74% for 12 months, then variable. No closing costs, $75 a year fee, 10 years draw period, no prepayment penalty. You must keep your account open at least 3 years. That is a great deal. That is a great deal. What's this called? Harbor One Bank. Everybody, if you're looking at another bank, that's another one. Add it to the list. Harbor One Bank. Okay, so if it's a quad in Arkansas, it's possible. But like I said, Williams, it'd probably be easier for a cash out refinance for that. Email garlandgroup@unmb.com. garlandgroup@unmb.com. Let's see if we can help you. Okay, shout out to my man Ron on Instagram. Ron Peasy. Shout out to you. Learning is earning. That is a fact. All right. Make sure you guys go. If you're on Instagram right now, you want to catch the replay of this video, make sure you do so by going over to YouTube. This video will not be saved on Instagram. Make sure you go over to YouTube to save the video. To watch the replay of the video, I should say. Okay. Go to the live tab and you can watch it. Like, comment, share, subscribe. If you're on YouTube, if you're on Instagram, you can comment YouTube on any of my posts and it'll send you the link, or go to MG the Mortgage Guy, search it on YouTube, right? Check out the live tab because we got some great content that was put out in the past 2 weeks that you guys can really learn a lot from. If you're a realtor, lender, home buyer, investor, no matter what stage or level you on right now, join the inner circle, scan the QR code, give you a once-in-a-lifetime offer for only $4.97. You don't get any one-on-one access, no deal analysis, one-on-one calls, no one-on-one 30-minute calls, 45-minute calls with me, but I'm giving you this, the lowest price I ever had, the inner circle, on that QR code right there. You don't get access to that stuff, but you get access to everything else that comes with the inner circle. So tap in with the inner circle. You can do payment plans and everything. All right. This is Matt Garland. I'm out of here. Like, comment, share, subscribe, hit the bell for notifications. And tap in with me tomorrow, man. I'm gonna come back on here tomorrow. I got some other things I want to talk about with you guys tomorrow here on YouTube Live. Okay. All right. Peace.